I know that you hate to make predictions and forecasts, so I'm going to start by asking you to make prediction and forecasts. Is what we have seen since July last year, is this a fundamental change in the dynamics of the global oil market?
Oil prices will steadily begin to recover. The data that we are seeing on supply suggests that the policy that was delivered in November, the OPEC policy, is having an impact. However, I think the very difficult moving target that we are not able to establish is the speed with which this great bulk of new US oil production will be able to drive down its cost base. Now, before the OPEC meeting in November, the received wisdom was that the marginal barrel would cost $85 per barrel. Therefore, that oil prices wouldn't fall below this level because the global supply side required those prices to bring new supply onto the market. Well, I think it's quite possible that we will see that this collapse in oil prices will drive huge efficiencies very quickly through the US oil patch. Already we're seeing, for example, we've seen a lot of rigs stop drilling in the Bakken formation and move to the Permian Basin. Now, the Permian Basin has very few, in the US, has very few horizontal wells drilled yet. But we know that when they start drilling horizontal wells, you will see an increase in productivity of maybe up to 300%. So I think we have to be very wary about trying to double guess the speed at which these efficiencies will be delivered. And that makes it very, very difficult to work out what the supply picture is further down the road. The question is, can they make money producing at $60, $70? Well, I suspect that over time, yes, of course they will. Does this mean that we're in for a prolonged period of subdued oil prices? I think we can say goodbye to $100. I think probably we are more likely to end up in a range around 60 to 70 in the long term.
Long term being 3 to 5 years?
Yeah, 3 years, let's say, yeah. The extent to which geopolitical risk is perceived as an oil market driver. I think if you look carefully at Iraq, everybody is very concerned because of Daesh in Iraq and the potential threat that poses to the southern oil production, where the bulk of their oil production is. All the evidence is that there is no chance that Islamic State will have any impact on those areas. I honestly believe that. Libya, well, Libya has already collapsed as an oil producer, so there is really no more bad news to come from Libya, no matter what happens with the security there. It's as bad as it can get. Iran, I think, is a very interesting question. My view is that far from being naive about how US Congress works and how US government works, the Iranians are very familiar with this conundrum, with this challenge. They fully understand that a Republican-dominated Congress will not ratify any deal, and they expect that. What the Iranians want, as part of a nuclear deal, is first of all a lifting of UN sanctions, secondly a lifting of EU sanctions, which would collectively give them access to the banking system, SWIFT and so on. They understand that lifting US congressional-driven sanctions is going to be a much longer-term project. And I have to say that, however, that if this deal does come to pass, and that there is a progressive lifting of the EU and the UN sanctions, then what we will see is European and Asian oil companies going in, and not just oil companies, other investors as well, going into Iran, And I think that it will be a compelling argument in Congress to allow US oil companies to compete there as well. So I think the pressures will change over time. That's the million-dollar question, and I think that it's inevitable that they had to do what they did. They realized it was unsustainable. You know, I'm convinced that Mr. Naimi was determined not to repeat the mistakes of the 1980s, where you saw Saudi oil production fall dramatically in an attempt to support prices, but the price fall anyway. And I think he was determined that that wouldn't happen again. So you don't lose twice on the price and on the volume. However, there may be, it's rather an extreme way of, let me put it like this. Saudi Arabia had for many years said that it believed that $100 was a fair price for oil producers and for oil consumers. And it was a price that didn't negatively impact demand growth over the longer term. It changed that view very dramatically in the fall last year, and that's the issue. And that's why you saw a big price reaction. And this is why I say that the comments and the policies of major oil producers like Saudi Arabia and the GCC countries are very, very important to the oil markets, because the expectations of Saudi Arabia matter a great deal. This is not my area so much, but one thing I would say is that where you have a naphtha-driven petrochemical feed, using naphtha as a feedstock, then you will see this kind of volatility continue, because naphtha pricing is a pure derivative of crude. Where you have ethane pricing, particularly in the kingdom, where you have fixed prices for ethane, it's less of an issue. I mean, at least you can keep your costs at a reasonable level. But quite clearly, the big challenge in my mind for petrochemical producers here and further afield is that you have a huge amount of new gas production coming on stream in the US, and the ethane that will deliver, and that this will mean that we see gradually a progressive relocation of the centers of production of advanced petrochemicals and basic petrochemicals to the US, and potentially you will see also the petrochemical plants in Asia starting to take gas or ethane from the US as well. So I think your industry is in a huge period of change, regardless of what happened with the oil price, although that obviously has had an impact as well.
The US, of course, still they're not allowed to export crude. So in terms of external revenue generating exports, you've got to turn it into petrochemicals before you can export it. Is that right?
They are exporting a huge amount of diesel and naphtha, and quite how US energy policy evolves in terms of allowing exported crude, I don't know. I can't call that one. But we know that the US is going to be a very significant exporter of LNG over the longer period of time, possibly ethane as well, and definitely products, naphtha, diesel. And we have seen job losses, and we've seen delays to major projects, and this process will continue. But, it's not a disaster. It's actually quite a healthy thing in many ways. It allows these oil companies to refocus on the productive areas of their business, to drive down costs, and this is certainly true for Saudi Aramco as well. Saudi Aramco is involved in a massive program now of reevaluating contracts, costs, day rates that it pays for rigs, so on and so forth, and getting better deal. And the other thing is, as we see, as energy prices fall, one of the biggest inputs into project costs is energy. So as we see as we've seen energy prices fall, so project costs will fall as well, which is a net positive for those investing in major new projects. Well, if we had another major outage, if there was any sign that there was a threat to southern Iraq, I think that that would be sufficient. Obviously, if there's any sign of instability in the Arabian Peninsula, beyond Yemen, Yemen is a special case for reasons we explained. I think Yemen is such a minor producer of oil, and the feeling is that the GCC is able to contain the crisis to some extent. And the GCC is very focused on containing this crisis.
What about if the current Saudi oil minister retired? What do you think that would have? What effect would that have on the market?
Well, the oil markets are always very focused on the leaders of the major producers, and so it will generate a lot of headlines. But my expectation is that Saudi Arabia will continue steady, conservative, relatively predictable, and I think the changes in Saudi energy policy are always incremental, and they take a period of time to be delivered. So I don't think that the global oil market has anything to fear from change in personnel here. Likewise, I think that the alarm bells are more likely to be set off by events outside the GCC. So I think we're talking about potentially Iraq, potentially West Africa, North Africa. If there was a major blow-up in Algeria, for example, I think that would be of major concern. How efficient do we think US oil patch is at driving through cost reduction? That's the real question. How quickly do they adapt to a falling oil price?
And also, a falling oil price is politically very positive for the domestic US market. It's reducing gas prices, it's reducing, it's like a tax cut for the American public. So, I mean, you could spin that conspiracy theory. The precise opposite is that approaching an election year, any government is going to want to have oil prices low in the US so that the consumers feel the benefit. The only people that benefit from high oil prices in the US are the producers, companies.
The other point, I don't want to labor this point, but we didn't really yet discuss fiscal requirements in the oil-producing countries. So you have to ask yourself, quite clearly Saudi Arabia is in a very strong position to weather the storm fiscally or for the medium term. Other countries not so much. So the question then becomes, how long can major oil-producing countries weather the storm, and which ones are the most influential in those decisions? And so if it's a balance between how quickly does the US oil supply become effective at current oil prices, or become profitable at current oil prices, and how quickly a fiscal system can adapt to a lower income, then that's kind of the balance I'm thinking about. When there was a big agreement involving Mexico, I was there. It was in The Hague in Holland. With Mr. Naimi was there, and the Mexicans were there, Iran was there, and the Russians were there. The Russians committed to cut, but they never delivered it. Now, I don't think that there's any genuine prospects that the Russians will cut oil production to support prices. I think it's unlikely to happen, but that doesn't mean that Saudi Arabia will shut the door on that option. And they've kept the door open, they keep the channel of communication open in the hope that there will be at some point a realization that Russia could benefit from a integrated OPEC, non-OPEC output cut. But I don't think that the prospects for that are very strong right now. I think demand is the big concern for oil-producing countries. They talk more about security of demand rather than security of supply now. There's plenty of oil in the world. The issue is the demand going to be there in the medium and longer term? I think that when you look around at the major growth economies, like I said in my presentation, the three pillars of support for demand growth in oil are Asia, particularly China and India, the Middle East itself, very important, and other developing countries, including Latin America. It seems to me that for its own reasons, domestic energy demand growth in the Kingdom and in other countries in the GCC is on a very high path that is not ideal and would be best moderated. But that is a political decision that needs to be taken at the very top, and I don't see any prospect of that in the near term. The issue, therefore, turns to China and India. Well, every time we see evidence of Chinese GDP growth, it seems to be being scaled back. And we are also have to acknowledge that in the OECD countries, the industrialized countries, demand is, if you look at the Japanese model, it's been falling for years. Every year, Japan uses less and less oil. And in fact, I had a meeting with a Japanese government official a few weeks ago, and he'd just come back from Tokyo, and he told me, look, the reason for that is very simple. The top 10 popular cars in the Japanese market, 5 or 6 of them are hybrids, and the other 4 are micro compacts with engines of about 500 cc. These cars are using less and less oil. Now, you don't have to be a great mathematician to look at the US market for transportation, the car market and the light truck market, and look at the standards on efficiency that they have, which are very, very poor. There's a huge amount of low-hanging fruit on efficiency if the politicians want to go in that direction. So, yes, you're absolutely right. The issue of demand is live, and it needs to be very much focused on. People like me tend to look a lot on the supply side, but the demand side, I suspect, will be more important over the medium term.